So let's move on. Let's talk about behavior gap and how IFA can help reduce the gap.
Sure. So there's been a lot written about the behavior gap. Dalbar has been doing a study on this for many years, but they have been highly criticized by the academic community. And so I realized that among our own clients,
Yes.
I was seeing the behavior gap, especially during the 08-09 financial crisis, where many clients wanted to sort of time their way through this crisis. So after, I don't know, we were down 20% or so, we started to get a lot of clients to say, hey, I'm going to step aside, let this knife fall. When it's down, when it's at the bottom, then I'm going to buy in, and I'm going to outsmart all you buy and hold investors. Well, we had about 160 clients who tried to do that. In fact, again, you can go here to the app. Chart 12 brings up this very chart, which is our own client study of the behavior of investors and how that is detrimental to them capturing the returns. So here's what we found out. When we looked at the 176 clients who had moved their portfolio by more than 25 portfolios. That means if they were in a 75, they reduced their risk exposure to less than a portfolio 50, okay? So we had 176 clients that did this. So I was dying to see among our own clients with our own data, clients who stayed here at IFA, what that did to their performance relative to clients who hung onto their portfolio, rebalanced their portfolio, basically followed the advice of all the academic research. And what we found out was amazing. These clients who did not follow this advice ended up earning only about 70% of the return they would have earned had they just hung on to their portfolio. And those clients who stuck with our advice, stuck with the whole 12 steps as outlined in my book and in my film, they earned the full return of that index portfolio that they started out with. And so I think we can put to rest all this criticism of this behavioral gap because we have it with actual client data. That's a study of 652 clients that's right here at IFA who stayed here. We've got the data. If you want to come look at our Excel sheet, we'd be happy to show it.
Cool. So how do we...
Let me just say that's the gap. The gap is 30% between those who stick with it and those who try to time their way through a market volatility. Go ahead, sorry.
So how do we reduce the gap? How do we help them? Is it like, I mean, we help them every minute, every day.
You should ask. How about IFA.TV? We're here to eliminate this speculation by providing them this education. We have 457 videos right here on your phone.
One video a day.
You're bored sitting on your couch, you don't like what's on TV, hop on the IFA app and watch one of these videos.
Every day, one video.
Well,
like Apple a day, you know, like a video a day.
Just start watching a video a day and you'll become a much better investor. But it's unfortunately, our emotions are so strong, it's not a good idea for you to engage in this without a coach. Because you get to a point where even our own advisors sometimes freak out. I had an advisor, you know, had invested in a 100% equity portfolio. The market crashed. They couldn't even handle it, and they sold their portfolio and left the firm. So it's not easy to hold on to volatility in the markets, and that's why it's good to have an advisor. So before you trade, you can call up and get some reassurance. You can get another explanation of how this data works, or of the randomness of returns, a better understanding of what you see in the Galton board, like the difference between an expected return and a realized return. This is my latest sort of revelation of the Galton board, Stock Market Edition, is it really helps people understand that just because you expect something doesn't mean you're going to realize it. And that's from the middle, top of the Galton board to the distribution at the bottom. And to me, that's a great lesson that you can pull from that device.
But we do put financial plans, for clients.
So financial planning is another really valuable service we offer for
Yes.
them. If you don't measure, you can't improve.
Yeah.
And a financial plan allows us to measure what their assets are, what kind of expected growth we see in these. That's
Yes.
an estimate, that's not a measurement. But a measurement tells us what you have now.
Yeah.
A lot of people don't have an accurate balance sheet.
Yeah.
They haven't collected all of their assets, all of their liabilities, all in one place.
Yeah.
And this e-money software is fantastic for this, and they have the ability to what's called count aggregate, and every day you get an update.
Yeah.
That's a wonderful measurement.
So even with having a what I'm trying to say is you have a financial plan, stick with it, and the good, bad, and ugly, all these returns are baked into the probability of success of the financial plan. And once you have the probability of success of 95% and more, there's nothing to do. You just sit tight and let the portfolio work for you. And I tell my clients, you have a plan as anything changed.
Right.
Revisit the financial plan once a year. If anything has changed, we will rerun the plan and
Sure.
talk about it. But don't make changes to the portfolio just because you feel like it, or
Yeah.
a friend or a family member suggested the market is going down and all these things.
Yeah.
Which is just
Going?
nonsense.
Going.
Yeah, going.
It's
Gone. Sorry.
That's what the friends say,
Yeah.
though. Another common error
Yeah.
is people talk about markets going in some direction.
Exactly.
That's completely false. All you can say is what it's done or where it's been, or that it's gone to a certain place.
Yeah.
And so this idea of going is one of the reasons we have active management.
Yes.
When people get on CNBC or Fox Business, market's going here and going there, well, of course, you want to take advantage of
Yes,
that.
absolutely.
And it's all designed to get people to trade.
Yep.
Because most of this financial services industry has a business model that is dependent on trading.
Yes.
Not here. We don't want you to trade.
Yes.
In fact,
Stick
when
with
I
the
have a
plan.
no trading, yes, no active funds right here in the cup.
Yeah. Stick with the plan.